Okay, so we're going to have a look now at this Jayne Slater activity that's on page 359. It's an example of an income statement where we're forecasting one for 2018 based on what's actually happened in the previous year, 2017. So unless it's a brand new business, the previous year's income statement, the factual one, the financial accounting one, is always going to be our starting point for our forecast, our management accounting activity. So you can see here there's going to be some useful information that we can get from the accounts for 2017. Starting here with the revenue, we can see that total sales are £180,000 for 12,000 units. So if we divide the 180,000 by 12,000 units, we come up with a selling price of £15 per unit. Okay, so that's going to be useful information when we start looking at the additional info to try and work out what's actually happened or going to be happening next year. We can do the same thing with purchases. If we divide that 91,000 by the 13,000 units that we've purchased, that is going to give us, I think, £7, isn't it, per unit. So that's what it's costing to buy the units, and we can check that with the inventory. 21,000 divided by 3,000 units. Obviously closing inventory is valued at the 2017 cost price of £7 per unit. Opening inventory though would be valued at last year's cost, so the £12,000 divided by 2,000 units is £6 per unit. So that's using 2016 prices because it's opening inventory, but that doesn't need to concern us. We've also got some information about the wages and other expenses. One thing to note is carriage outwards, remember, is payable on units sold. So we need to use the sales figure, the number of units there, 12,000 units. £1 per unit is £12,000. Sometimes students get confused and start using the number of units purchased, but because it's carriage outwards, it's the cost of getting those goods to the customers. So if we have a look now then, I can get this in focus, at the additional information we're given. She's in the process of preparing her budgeted income statement for June 2018 and has identified the following changes. So the unit selling price to customers is going to be increased by 8%. So we need to start with the £15, which is the current price, and times that by 1.08, or add on 8%, whichever way you prefer to do it. So £15 increased by 8% gives us a new selling price of £16.20. Okay, but this is going to decrease the number of sales, or the volume of sales, by 4%. So if the volume of sales in the previous year was 12,000 units, if we take 4% off of that, that's actually going to give us 11,520 units. So if we multiply those two together, £16.20 multiplied by 11,520, that is going to give us a sales revenue figure of 186,624. Okay, so that would be, when we do our income statement for June 2018, instead of 180,000, we're going to have this 186,624. So that's your revenue figure. Okay, opening inventory is going to be the closing inventory from the previous year. So opening inventory for 2018 is going to be the £21,000. Okay, the unit purchase price will increase by 50p. So last year the purchase price was £7. So the new purchase price is going to be £7.50. Okay. The number of units of closing inventory will be reduced by 10%. So closing inventory at the moment, 3,000 units. So if we take 3,000 units minus 10%, that's going to give us a closing inventory of 2,700 units. And remember, that's going to be valued at the new cost price of £7.50. Okay. Now, in terms of the number of units we need to purchase, we're going to have to work that figure out. So the units that we need to purchase, if that's in focus or not, we need to start with the sales figure. So sales in units for next year is going to be 11,520. Okay, so we're going to need to make sure that we've got enough units purchased in order to satisfy those sales and make sure that we leave enough for closing inventory. Now we've already got the opening inventory in stock, so opening inventory is, remember, going to be our closing inventory from last year, which was 3,000 units. We don't need to buy those, they are already in stock, but we are going to have to make sure we buy enough inventory to leave us 2,700 units at the end of the year. So we add that on. So we need to purchase 11,520 units minus the 3,000 that were in stock at the beginning, plus the 2,700 that we want to have in stock at the end of the year. So we want to purchase 11,220 units at £7.50. So our purchases figure is going to be 56,000. Oops, that's not right. Now what's happened to my calculator? 11,220. Oh, 11,220. Bad workman blaming her tools again. £7.50. 84,150 pounds. So that's how we're going to arrive at purchases. So just to recap, the opening inventory is going to be this figure here. £21,000 brought forward from the previous year. Purchases are going to be 84,150, and the closing inventory is going to be the 2,700 units we've got up here at £7.50. Let's just work that out. We've got all the numbers. So closing inventory is going to be £20,250. Okay. The rest of it's fairly straightforward. Wages are expected to increase by 2%. So as long as you're okay with percentages, just take the wages figure, £6,000, and multiply it by 102 over 100, or multiply it by 2, hit the percent button on your calculator, however you want to do it. £6,000 times 2% is an extra £120. Add that on. Wages are going to be 6,120. But general expenses, because of efficiency measures, are expected to fall by 10%. So the general expenses, 5,500 minus 10%, or multiplied by 90%, whichever way you want to do that. 5,500 times, I'm going to do times 90%, is going to give us general expenses of £4,950. Rent for the year will increase to £6,000, so we don't need to do anything with that. They've already given us the number to use. Carriage out will increase by 10% per unit. At the moment, Jayne is paying £1 per unit. So if that increases by 10%, she's going to be paying £1.10. And remember, that's going to be on all the units that she sells. So we're expecting to sell 11,520 units. So £1.10 times 11,520 is 12,672. Okay, and then again, depreciation is stated, it will be £3,600 for the year. Okay, so all we then need to do is stick all of that into the income statement, and here's one that the book prepared earlier, so you can see all the figures there that we've worked out. So hopefully, if you're not sure where any of them have come from, that has now explained it for you. Thanks for listening.